You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody, that music means we are back once again. It is Wednesday. It is time for Options Bootcamp, what the cool kids call OBC. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are binging. If you want to join us on the pro, get in there, theoptionsinsider.com/pro, the place to go to learn more. I can't imagine a week where everyone needs it more. We got some historic things happening out there in the markets, listeners. And joining me to help break it all down, the black-hatted one himself. I'm distracted by a million things going on here in the studio today, listeners. The black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring, what the cool kids call to Mr. P. Welcome back to the show, sir. Mr. P, I think you are muted, sir.
Hey, you're right. How did you know?
It's like I've done this once or twice. You know what? I get it. You're just flummoxed by the madness that is unfolding out there as well. I'm with you. It seemed like it's so mad that it's wreaking havoc with our live servers here, so we'll look into that while we get rolling with a little bit of the old options drills.
Well, in bunch, time for our favorite pastime, option drills. We're going to take the strategies learned during the show and teach you how they can be employed to achieve a specific objective. Do you hear me? Yes, sir!
All right, everybody. Yeah, it's options drills. I had a whole bunch of stuff planned for today. We're still going to touch on it, but I don't like to use the words, unprecedented or historic very often. They're thrown around way too often. And even last week I said we're still not in quite historic territory or unprecedented territory, really. Definitely historic. Not quite unprecedented earlier in the week. As the week progressed, we did move into historic territory, of course, equaling, if not exceeding, what we saw in the madness back in March of 2020. And intraday swing now, we're seeing intraday swings into this week that meet or indeed exceed what we saw in the flash crash. For those of you who are newer listeners who weren't trading options, what was that? 15 years ago? That's crazy. That was 15 years ago. But yes, that even predates this show, listeners. That's how old the flash crash is. But yeah, it moves even exceeding that. But yes, historic markets, unprecedented markets, also unprecedented because the options market, let alone the broad financial market, has never really gone through a global trade war like this. I mean, the closest precedent, if you go back in history, is really got to go back to 1930. Obviously, there was no modern options market in 1930. Options didn't come along until 1973. And this modern incarnation of the options market is really a recent phenomenon post-COVID, where we're seeing 1 billion plus contracts a month. And as our buddy the Flowmaster pointed out last week, for the first time ever, 100 million contracts in a day. So we are now in the unprecedented, historic, call them what you will type markets. My plan for today was to come in here and talk about some things you could do to navigate this. I also wanted to get Dan's thoughts on this because it's historic, it's unprecedented. We don't like to do a lot of timely stuff on this show because a lot of people are coming in months, if not years down the road, but this is kind of a one-of-one scenario, at least for right now. We'd be remiss if we did not mention it. But then, of course, coming into the show today, the moment everyone was kind of wondering about, we're all living in pins and needles on what tweet will come out next from the White House. And they did what people were expecting or maybe dreading if you're a bull and you wanted to get back in, was hoping you're not going to miss the bounce. Well, we're bouncing hard today. Looks like if the reports are true, the administration did, I won't say cave, but did back off the precipice. They are agreeing now to the 90-day pause on the reciprocal tariffs. The market loving that, up close to 8% now in the S&P, up over 9, almost 9.5% in the NASDAQ, 6.25% in the Dow. VIX vol coming crashing back to earth, down 14 handles, or about 27%. So take everything I was going to talk about with a high vol environment with a bit of a grain of salt. We may be crashing back to earth. But that said, Dan, that's a lot of setup, a lot of table setting for you. I wanted to give you a chance to express your thoughts to our listeners because these are historic, unprecedented markets out there. What are your thoughts on the volatility we saw up to today? We could do a whole separate episode just on today. Then, of course, what we're seeing today, and then some of your approaches you've been taking to navigate these markets, sir.
Wow. Where to even begin on this, man? I was like, I had my nose buried in some stuff earlier, and I always keep my trading platform open. And so, I'm looking down in my own world for like probably a good 20 minutes, half hour. And I look up, I'm like, what the heck? Up, 7.5%. Hold up. Wait, what? Do I have this on, on demand? Was I looking at some sort of like, the Great Recession, Great Depression sort of thing? What's going on here? And then, I saw the news and I was thinking to myself, do I even remember a day that was ever up this much? Like I remember some being down this much. Was there ever a day that I remember being up this much? And I couldn't think of one offhand, but it wasn't since like 2008 that I'd seen. I mean, I guess there was a day in the pandemic that was probably around here, maybe a day or two. But that 2008, I guess our leader carved his way into financial history one way or another. Very interesting.
Yes, self-imposed crash and now self-induced rally out there, listeners. So yeah, these have been wild times. I know, Dan, you've been talking for a little bit about selling some puts and getting hit on some and taking the underlying or rolling. What have you been up to from just a general trading perspective as you're navigating these markets, sir?
Yeah, a couple of things. I've been trading and investing. As far as my investing goes, that was selling puts. And, hey, I get it. I'm in the process of writing a book on selling puts and cash secured calls. Intellectually, I get it, but I'm still a human. And when you get assigned and you're like, crap, I'm assigned on these puts 10% above where the market is. Geez, my crystal ball wasn't working. I should have waited. Oh, geez. But it feels a lot better when the market heads up this high and it's like, oh, okay, well, maybe get a little redemption here faster than I thought it was going to come. As far as investing goes, really I wasn't worried, but because it was a long-term thing. But I sure thought it was going to be longer than 24 hours of waiting for it to make a big move higher. And then, trading's been weird. You have a whole lot more volatility. And so, you just get these trades. I did make a trade really before some of these bigger down moves happened, the more aggressive ones, which was a put credit spread. And it was like, well, that's not working out right now. Jeez. But then, I had some bearish VXX trades where I'm like, okay, not doing too bad on these. So yeah, it's it's you hang on, put on your helmet, your seatbelt, and have some fun. Don't let the bad emotions get in there, and enjoy it. This is truly a great market for traders and especially investors, if you let it be, and you should.
Look at you listening to our episode on vol products, getting short a little VXX. See, you got lured to the dark side as well. I like it. I like it out there. By the way, before I'll get to all that fun in a second with some vol product fun, but I'm looking right now, Dan, you brought up an interesting point about the largest up moves. I'm doing a little digging while you talked here. The largest percentage up move day in S&P history, listeners, goes all the way back, Dan, to the halcyon days of 1933, when the index was a whopping 6.81 and it closed up nearly a point. So that was almost 17% to the upside. So you got to go back a ways. 1929, 1931, 1932. You got to go back. Number 5 and 6 were in what we would call modern market history. These are 2008, October 13th and October 28th of 2008. We were up 11.58 and 10.79%. respectively. So far higher than today. Then back number 7 is 1939 again, a little over 9%. Then we go back to 1933 again for number 8, 9.5%. Then we go back to March of 2020, March 24th. We were up 9.38%. So that's probably the one you were thinking of, Dan, the most recent in our memory. And then March 13th, before that, we were up 9.29%. So we had consecutive nearly 10% up days in the span of a little over a week. I remember March being wild. That's pretty wild. Then you go back to 1929. Then you go back to October 21st of 87, where we were up 9.1% after all the big shocks. So, yeah, wild times out there, Mr. Dan. We're not quite in top 10 territory, at least for right now, from an up move perspective, but we are starting to nibble at it, Mr. Dan. We're definitely in the top 20, that's for sure, in SPX land. But yeah, you mentioned some interesting stuff I want to talk about, because I mean, a lot of people have been taking different approaches to this market. Some folks have been doing some of the obvious trading strategies. Maybe you were looking at SPY or SPX and saying, I like it at levels, obviously 1,000 handles below where it was trading not too long ago. Maybe you were writing puts at the 5,000 level, a little bit below, a little bit above. Maybe you got some put to you right now, in which case you're probably a happy camper right now. Or maybe you just got the puts, in which case you're scrambling to get some of that upside as well. Those are kind of some of the obvious ones. Also, maybe some of the single names you like that have been getting beat up. NVIDIA comes to mind. We have a question of the week about that right now, about puts on the power strike. We'll get there in a second. I have a feeling maybe today's action may change some of that voting out there. But then there's some of the less obvious strategies as well. Dan pointed out one. And this gets back to our episode talking about vol products, which, by the way, if you want some episodes to refer to outside of this one for navigating these types of market environments, episode 315, Navigating Volatility Products and Taming the Beast from November of last year, a very good one. I do believe that's the episode where Dan got lured to the dark side of VXX. And then episode 171 from January of 2022, where we talk about trading in volatile markets. Very applicable to what's going on right now, because even though we're rallying, it's still 8% move is still vol. Moves are vol at the end of the day. Listen, people forget that upside moves also equate to vol, not just downside. Everyone conflates downside and volatility, but moves are moves. Moves translate to vol regardless of which direction you're going. So just remember that. Now, speaking of vol, some of the less obvious trades outside of the selling puts in the indexes or in the single names you may have wanted to consider coming into today was, of course, some of the vol products you talked about before. Dan mentioned one, getting puts, getting short products like VXX. VXX attempts to replicate a long VIX futures position, does a marginal job at doing it, which means it erodes over time. So going short that product over time is the way to go anyway. Again, go back, check out some of our volatility product episodes, or go check out a show on the network like Volatility Views if you want a deeper dive into that. But VXX, fading that over the long term, usually a pretty good play. You could buy out of the money puts, find your strike you're comfortable with, your premium level you're comfortable with, your duration you're comfortable with. But that is a timing element to it, which can be challenging for some folks. If you want to get even deeper into the timing element, there's levered products like UVX. I have been playing some downside in UVX Again, that's not for the faint of heart, listeners. That is a levered 2x VIX product. So if you're okay with doing that, and even I was not just going straight up long premium out there, because that's madness. You're going to spend 100+% vol to buy these options. You have to sell something against it. So I've been doing very wide broken wing downside put flies in UVIX. That's challenging also because liquidity in UVIX, not the best. So again, that's not for the faint of heart. I don't recommend that really for most of the listeners of this show. You have to be pretty comfortable with the vol space. But if you are intrigued, a little bit more deft, and you're willing to be glued to your screens, this is not a set it and forget it trade, then a levered product like UVIX could be your huckleberry. Or another way I've been going out there, which I know is attractive to a lot of our pro members who've been listening. We were talking about this yesterday in our pro Q&A with our buddy Dr. Vix, Mr. Russell Rhodes, about a product called SVIX. Now, if you're saying, I think vol is going to come back to earth once all this madness sorts itself out, and it kind of has to, right, listeners? VIX can't stay north of 50 forever. If it did, that would really break the market, obviously. VIX is a product that's more comfortable around the 20 level, if not in the high teens. So it is a mean reverting asset. The question is, when is it going to revert? Well, an inverse volatility product like SVIX is a great way to go about playing that. Now, if you're saying to yourself, if you've been around for a little bit, I'm a little scared of that because there was another product called XIV that was inverse vol that infamously went to zero back in the vol spike of 2018. So I'm a little bit skittish about getting back in those waters. I understand you. And the regulators understood you, which is why when they approved this new product, SVIX, a few years ago, they made sure there were some protections in place. Like, for example, they buy VIX calls and have those in their back pocket. So when all this explosion was happening, they were monetizing VIX calls to help protect their product against the worst case scenario, which for them is an explosion in VIX at the end of the day, which of course could drive any inverse product to zero. There's no theoretical limit to the upside to VIX, right, listeners? So this thing could easily get wiped out. So they have those protections in place. So this product was trading north of 30 up to 40 not too long ago. Down around 12 or 11, we were talking about it on our Pro Q&A, rallying a bit again north of 12. We have been selling puts in there pretty successfully, but the downside of selling puts is if you get the big move, you kind of miss it. So I've been using some of those premiums from the puts I've been selling now to buy upside and actually just buy some underlying as well. Longer term, I don't mind being long SVIX underlying because as long as the product doesn't go to zero, which has a small delta these days, then vol has to revert, SVIX has to go back up. So if you're a little bit more intimidated by the timing aspect of some of these other vol trades, like a VXX or a UVIX, God forbid UVIX if you're not ready, that's a levered product, then an SVIX might be a little bit better play for you. You can go out and just pick up the underlying if you don't want to sell the puts, and especially if it's continuing to rally like it seems like it is. Now, SVIX is not a long-term buy and hold. You want to own it. You want to let the vol revert. You want to let SVIX go back up to a 30 or above level, maybe, if you're fortunate up to a 40. And then you want to get the heck out of Dodge and let this whole cycle repeat. But that said, if you're a little bit skittish about timing all this stuff, a product like that could be an easier way to go about that. All right, Dan, what are your thoughts? Any last-minute thoughts you have for the folks out there on navigating these troubled waters before we get to some of their comments and questions?
Oh, my gosh. I've got a couple of questions, if you don't mind. So you said you were doing a broken wing put butterflies in, was that UVIX?
That was UVIX. That is the sibling product to SVIX. SVIX is inverse, excuse me. UVIX is levered. That is a 2x VIX product. Yeah. That is not for the faint of heart. Especially when it's up near a 70, that product is an untamed beast. And the other challenge to that is that the options liquidity is not the best. So you have to be a little bit deft getting into and getting out of multi-leg spreads like that. So again, I don't recommend that for novices. But if you can stomach some of the turbulence out there, that's going to revert obviously a lot faster than anything else. The other problem with that, though, is, of course, if Trump changes his mind tomorrow, we go right back down, UVIX is going to go back up faster than everything else, too, right? So it's a double-edged sword very much. But if you're okay with that, and the premiums are very high, so you're going to need to sell something else against her. In my case, I sold two, and then I bought one farther out just to try to defray some of the ridiculous premiums you're getting out there. But I also made my broken wing flies very wide because you want to give yourself some room for this thing. If it's going to go, it's going to blow through your strikes pretty aggressively. So I can hear Dan's wheels going. He's getting lured to the dark side. By the way, Dan, UVIX is down 33 points today. It's 58.85. So that just gives you a sense. It was up at 100.
Yeah.
So, I mean, this is just wild territory. So if you could stomach, when UVIX was at 100, if you could stomach buying a 70 put a month out, you were going to pay for it, trust me. But if you could stomach that, you're 12, 11 handles in the money right now. So again, that just shows you what kind of product this is, sir. So yes, let me add another weapon to your Vol quiver. If VXX is a little too plain vanilla for you, sir, then UVIX is your huckleberry. Just be prepared. It is a beast.
Holy cow, man. And so when you middle the markets, you're getting decent fills, decent-ish?
What I've found with UVIX, and again, I don't want to turn this into a whole UVIX show, but what I have found with UVIX is it's a little bit of a roach motel on the options side. The market makers will be conducive to let you in. They'll sometimes get impressive fills to get in. Getting out, however, a little more challenging. They do squeeze you a bit to get out. So that's when I found you have to take the flies off, maybe piecemeal, take off one leg of, the put spread, let the other side kind of ride, or do things like that just to kind of unwind it piecemeal. Because if you try to take it all off as a unit, it's very challenging. So, yeah, you have to be a little bit diligent with working your orders, listeners. But if that sounds like you, and you're not scared of a 2x levered VIX product, and again, I say all this, VIX itself is a great way to go as well. If you don't want to deal with the levered downside puts in VIX, just again, there's a timing aspect to that. So you have to be comfortable. If you buy puts a week or two out and vol stays elevated, then obviously those puts are going to go away. So you have to be comfortable with that play. You could do put spreads, obviously. You could do put flies there as well if you want to try to pay for some of that as well. There's a lot of ways to go about that. Our Vol View show has talked about that quite a bit. Generally, in the vol products, you usually want to have something you shorted against your long just to defray cost, except maybe in unprecedented or nigh on unprecedented markets like today, Dan, where at the end of the day, days like today, maybe you just want to have some long units, right?
Yeah, for sure, man. Wow. Okay, interesting. Yeah, great stuff.
Interesting indeed, listeners. Let's see what you folks have on the brain right now. A little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, let's get to some of your thoughts, listeners. Dan, just yesterday, we did a flash poll with our audience. And we said, hey, we were seeing a little green yesterday, and then we were doing a lot of that intraday whipsaw dance. We said, quite simply, are you buying this rally? Does this have legs, or is it a dead cat bounce? Dan, 82.2% said, nope, stay short, stay in cash. Only 17.8% said, what turned out to be the right answer, yes, get long SPX now because you're 8% to the good or something along those lines. So yeah, Dan, our audience, I think, took the understandable approach that this was, probably a dead cat bounce, but also we're living in that, tweet-driven market. And yeah, just wild thoughts, Dan. What do you think? I should say wild choices from our audience. What are your thoughts?
Oh, yeah. Well, the ones that said stay in cash, dead cat bounce, they still could be right.
That's the crazy thing. They could be. You're right. China says, you know what? F you on your 90-day halt. We're tripling your tariffs. And then bam, here we are right back.
Yeah, because, well, if I read this correctly, and I don't like to even misspeak, but correct me, please. Didn't I? Well, you know what? I don't even want to say it unless I know. Hold on a second here. So this said, this news was. Hold on. Stay with me now. Wait now. Stocks rebound. Hold on. That he was going to do a 90-day pause applies to reciprocal. Wait, no, that's not the one. It's only for countries that did not retaliate, right?
That seems like it, but that would obviously not cover China, so that would make this rally kind of strange. So I need to dig into. You're right. It kind of just broke right before Trump says 90-day pause on reciprocal tariffs for some countries. So you're right. That doesn't sound to me like China.
Yeah. At 12:42 and 53 seconds, Benzinga Newswire has a headline, and a lot of times they'll just put out the headlines. It says U.S. Treasury Secretary says countries who did not retaliate will be rewarded. Mexico and Canada included in 10% tariff. I'm not calling it a trade war, but China has escalated. We're expecting, okay, countries come to us with their best deal. So that says countries who did not retaliate.
Yeah, my headline here says all Dow jumps, everything else, all these countries with the exception of China in big letters. So obviously China is the big dog. And, whither they go, so goes the markets. But, yeah, I mean, just I guess any ray of sunshine, any ray of optimism, Dan, at this point is enough to, in this case, cause a nigh-on historic rally out there, listeners. Yeah, let us know what you folks have been up to. Our chat's talking about they were selling some of those SVIX puts out there yesterday. Obviously, they're happy about that. But they're also switching to buying the underlying now, too, which, again, I can't argue with you. If you want to make sure you don't miss the next leg up, you can use maybe some of those put premiums to pay for a little bit of upside. You can also go the bullish risk reversal route as well. Use some of those put premiums to buy upside in SVIX, obviously in case this move falters, in case something else happens tomorrow, which is obviously highly likely. A lot of things can happen. But yeah, our audience was fading this, Dan. Our actual question of the week, Dan, was going back to selling puts on individual names. That par strike, that par level a lot of people have been eyeing that in NVIDIA for quite some time. So we said to you, this was on Monday. I have no idea where they're trading right now. But on Monday, I think we were still north, maybe a little bit south of the par strike in NVIDIA. We said the December par puts in NVIDIA were trading for about $18 on Monday. We said if you have to keep it through December expiration, which way you going? Are you selling those puts or are you buying those puts? Dan, gun to your head, which way are you going and which way do you think our audience is going?
Wait a minute, I got on the wrong thing. Which puts again?
December par puts in NVIDIA for $18.
Oh my gosh, December par puts in NVIDIA for 18. I'm a seller.
You're saying sold to you, baby. Well, our audience agrees with you. Nearly 2/3, 62.8% saying sold to you. They'll take that $18. Obviously, they'll take NVIDIA at 82 if it does fall off a cliff, or they'll take the $18 and say, thank you, sir. Again, 18% through the end of the year. Not a bad put, right? So 25.6% saying they want to buy those puts. 11.6% saying they are too scared. They want to stay the hell away from NVIDIA. We also had a fun flash poll earlier this week on the option block with we're talking about April 40 calls in VIX. They had traded a bunch that morning for around $3. We said, at that price, are you a buyer or seller, or do you prefer it as some sort of vertical? Almost 60%, 56.7% said you want to sell them straight up for $3. That's obviously turning out to be the right play right now. A little nerve-wracking. 20%, the more nuanced part of our audience, Dad, would sell it as part of a vertical. So they've been listening to our shows. They know that's a better way to go. You don't really want to be net short units in VIX too often if you can avoid it. 16.7% want to buy them. 6.7% say they want to buy them as part of a vertical. And also, we asked you folks last week, how low will you go when trading options? And again, this is kind of a fun evergreen topic. What price do you say, that's it, I'm buying the stock? $10, $5, $2, or no limits? And Dan, it turns out we have a bunch of no limits wild men and women in the audience. 38.1% said they have no limbo bar. There is no this far and no farther. They will trade options on stock down to a penny, sir. And then 28.6% use the traditional cutoff of $10. 23.8% say $5, and 9.5% go the $2 route. Mr. Dan, are you surprised, sir?
No, this looks about. I mean, I'd say this looks about right. I mean, I'm surprised more people didn't say $10, but it's not. It's a pretty reasonable distribution, I would say. Although I don't know who draws the line at $2. Like, you might as well just say no limit.
Yeah, at that point, yeah. I put that in there just because we have seen a lot of crazy options action on like $2 names recently. So it just kind of leapt to mind for us. It's a ridiculous level, you're right, but it's a pretty active level nonetheless out there. All right, let's get out to this question. Actually pretty timely, Dan. We were talking about selling puts earlier. We were also talking about a massive nigh-on historic rally in the major markets today. This question from 494 South Street, so maybe a house or a business is sending this in, they just like their address. Whatever reason, 494 South Street says, how do you avoid missing out on upside moves when you're selling puts on a stock? So Dan, very apropos for today's environment. What do you have to say for Mr. or Mrs. South Street? They want to sell some puts, but they're worried about missing out on the upside.
It's a different deal that you're making with the markets than being along a stock. You're going to miss out on some of them, but here's the real game. It's kind of the law of averages, right? Like if you're missing out on 50% if you're missing out on upside on 50% of your cash secured puts, you're picking the wrong stocks. Like you're doing it wrong. If you think about stock price distribution as a log normal distribution, which is what people think about it as with fat tails, then most of your trades are ones that you shouldn't have to worry about that way. But then on a few you will. So what you make up on the ones that you don't miss out should, if you're good at it, should outweigh the money you leave on the table.
That is definitely the case. If you're that concerned, 494 South Street, I mentioned earlier the bullish risk reversal. We have talked about that on this show in the past. That's a great way. If you're selling puts on a name you're thinking maybe there's going to be some near-term opportunity for upside, you could turn around and use those put premiums. Again, most stocks you're going to trade, the puts are going to be trading at a higher vol level than the calls and the indexes as well. So you could use that premium you're collecting from the put. And again, depending on how far out of the money you go with the put, you could put that to work buying an upside call. And again, depending on how far out of the money you go with the call, you could probably do that for a credit or at the very least even money. If you want to go even money, you can probably buy a call that's going to be much closer to the at the money than the put that you ended up selling. So take advantage of that skew. It works in your favor in that environment. And obviously you're giving up some or all of that premium you're collecting for the put. So you have to be okay with that. And that's a scenario, you're really worried about a near-term pop. That is one way to go about it. Again, if you want to maybe still collect something, you can go farther out of the money now and buy a call spread instead. So now you're selling two legs against the one that you bought. So you have a little bit of income stream there after all. But again, if you're expecting a big pop, make sure you factor that into the call spread the other leg that you sell. You don't want to cut off the upside. So just a few ways you can go about it. Or a day like today, we're talking about SVX running, in which case I had some short puts and I was just coming into the start of the show. I didn't really have time to look at the call wing. I wanted to leg into a bullish risk reversal. So I just picked up some underlying because I know longer term this one's going to keep running, even if it has some difficulties in the near term. And I'm already up on those just because it continues to go up as vol is eroding. So there's a couple of different ways you can go about that. All right, Dan, you got time for one or two more, or are you just shocked to the system, sir?
Let's do it, man. Let's do it.
All right, let's do it. I was just talking about broken wing flies, Dan. This question comes in from Shuritin, or maybe Shuritin. They want to know, why don't you guys like traditional butterflies? Seems like you mostly talk about broken wing flies. I'm not angry, just curious. Well, I'm glad you're not angry with us, Shuritin. I don't know why you get angry about butterflies, but hey, we've seen weirder things. Remember that one guy, Dan, who got really angry with you over the rule of 16?
Oh, yeah.
people have triggers on strange things.
Yeah.
So you never know. This guy's trigger could be butterfly. So I'm glad we didn't set him off, Dan. But that said, I'll go first because I'm the one who said that a bunch of times. I don't like a lot of traditional, what I'm assuming what you mean by traditional, Shuritin, is a symmetrical fly. So let's say, XYZ's at $10. You buy the 10 calls. Let's say you sell the 15 calls and you buy the 20. So five handles, everything lines up neat, easy peasy. I don't like those for a variety of reasons. Usually if I'm doing flies, I'm doing them for a debit. I'm doing a net outlay. I want something to move. But usually, if I'm going to do that, I'm doing them a lot of times in, let's say, a vol product like a VIX or a UVX or other products that are prone to, let's say, gappy moves. In those types of scenarios, a symmetrical fly, you need to really hit the bullseye perfectly in order for that fly to make any money. If you don't go out right on that strike, if you miss it by a little bit, that fly could go out worthless. And you were right on your direction, your movement, everything else, but you were not exactly right on the strike. And as a result, that fly has no residual value. So you want to avoid that if possible. But again, it's going to cost you a little more usually if you're doing these debit skip strike or broken wing, whatever you want to call them, flies. But I don't mind paying a little more if I have a fly where I know if I get the big move I'm looking for in a vol collapse like today, or in a big upside move like in a VIX, especially in a VIX. If you're doing an upside fly in a VIX, you sure as hell want to give yourself as much room to run to the upside as you possibly can, because that's why you're in the game. That's why you're there. You don't want to do a symmetrical fly, have VIX blow through all your strikes, and guess what? You were right, and your fly still went out worthless. So give yourself room to run. So if you get that extreme move, your fly still has some value at the end of the day. That's what you're paying for. You're paying for a non-traditional fly that, if everything goes aggressively in your favor, will still have some value. That's what you're paying for. You're going to pay for that. But if you're okay doing that, that's the way I can't remember, Dan. I have to think about it. I can't remember the last time I did a traditional, 1x, 2x1 kind of straight symmetrical fly. That said, what are your thoughts, Dan, on symmetrical or traditional flies versus the skip strike or the broken wing, and when you like to do one or the other?
I think that you made some very good points about the broken wing one. But I'll tell you the truth, like, it's one that I've never really gotten into. I don't know. I just never really experimented too much with it. Early on, like, there's a couple people who, swore by them, and I was like, I don't know, and never really jumped on the train. And I've used traditional butterflies for direction. And you're right, if it doesn't hit pretty close to the strike price at expiration, so time and distance, it's kind of a really fizzler. So I don't know, maybe that's something I ought to dig into at some point after I'm done digging into all the other types of trades I'm working on. But I think you made some solid points.
I think for me too, a lot of it is product based, and I traditionally am using flies on a lot of vol products. So you're expecting some gappage in those, I can make a similar argument. I think if you're going to use a fly on, let's say, a meme stock, right? You're expecting some sort of huge move. So you don't want to cut that off with a symmetrical fly. You want to give yourself a little bit of room to actually capture the move that you're looking for. So I think that applies definitely to the vol products you're talking about, listeners, and a lot of the meme names a lot of you have been slinging of late. If you're looking at maybe a more quiet name, maybe a broad-based, quieter index outside of the big indexes today and others, maybe you can make more of an argument for a traditional fly. But for me and my use case, I like to lean that way. Dan, we have this question from Just Nina. Did we answer this last week about Newsmax? I'm trying to remember. Do you recall?
No, we did not.
Okay, well, she just asked. This came in last week. Obviously, we didn't have time for it. It kind of got buried by all the madness going on now, obviously. And obviously, since our last show, Dan, a lot has gone on. But she asked, have you guys seen this Newsmax IPO craziness? Is this the meme stock 3.0? Have you traded any options on it? And she's talking about Newsmax. It was Class B, I believe, ticker symbol NMAX. And she's right. It was on a just a wild trajectory, listeners. Launching, going all the way up. Let's see, the 52-week high, $265. And the low was $14. It is selling off today, Dan, another $4.30 to $34.90. This is a name that you would probably want some options on if you were not for the faint of heart. Of course, when this came in last week, there were no options on Newsmax. People are usually pretty good. By people, I mean the exchanges, listeners, on knowing what people want to trade. Yes, there are options on it now. So they have listed them. Only took about a week, Dan. So that's good turnaround. The ADV in Newsmax right now, 5380 and doing 6,000 options today. The most active contract in Newsmax today, 870 of the April 20 puts, and those are opening. And we're at 34.65. So you got a long way to go for the 20s, Mr. Dan. But yeah, this would have been nice to have the options last week when it was falling from 265 to 100 or whatever. But that said, Dan, have you noticed this madness? She wants to know. Is this meme stock 3.0, and have you traded any options on it? The answer for me is I have not traded any yet.
Yeah, like the second day that it was trading, I had somebody contact me through email looking for a quote for some media publication. And, I was just like, I got nothing. Like, I don't know. Ask me something about options and volatility and that kind of thing. But geez, like a brand new issue like this, just jumping that high. Oh gosh. I mean, that'd be hard for anybody to really say anything of any substance. I think just a company that has no real track record that I can go back and look at earnings and all that kind of thing. But now I'm looking at it, looks like I would say it looks like it calmed down, but I mean, still it's an 11% move today. It's calm relative to the first couple of days of trading. I have not done any options on it yet, and I don't think I will until I see a little bit more price data.
I will say tip of a cap to the folks over there at the exchanges. They do a good job these days of listing these things fairly quickly. It used to take at the minimum of 2 weeks. Now we are well within 1 week. I've seen these things listed in, about 48 hours now from a hot IPO. So they know you folks want to get your hot little hands on these things. So you don't have to wait as long out there. But yeah, interesting stuff. Wild times. Dan, that music means we're come to the end of this episode, at least. If you need more, if you're hanging out in the chat, listeners, don't worry. I'll be back in a few minutes with our good buddy Carly Garner. I'm sure she's never reticent about expressing her viewpoints on things. I'm sure she will have some thoughts on these market moves we're seeing today and over the past week. So look forward to that. Hang out in the chat for a few minutes. We'll be back with her in a little bit. Of course, if you're listening on demand, just hit next on your device of choice. And of course, the futures rundown and Carly should be waiting there for you. And Mr. Dan, if folks have questions, and clearly they do in these markets, who doesn't? Then where should they go? What should they do?
Well, we actually have a webinar, an online training today at 4:30 Eastern Time, 3:30 Central. So make your way on over to markettaker.com. Click join free, and we'll be sending you an email so that you can attend today's webinar, which is all on mini trends.
Might have to change it to massive, unprecedented trends.
Yeah.
Massive, unprecedented intraday explosions to the upside. How does that sound for a webinar title, sir? Is that that catch
Might be
the
a little
ear,
long.
catch the eye? Ridiculous, massive moves and what to do with them. Yes, that could be a good title for this show as well. Hopefully, listeners, you've been keeping your powder dry for a moment like this, doing some good risk management. If you've been diving deep into those zero-day waters, that's been a rough go over the last week. You're either up a ton or your bank account is almost empty at this point. We were whipsawing a lot even yesterday around that 5,000 handle in SPX, up and down and up and down. It's challenging out there, listeners. So hopefully you're keeping your head above water, doing good risk management. You kept some capital in reserve to allocate for a day and for a moment like today. If you don't like some of the strategies and the tips and tricks we laid out at the top of the show, maybe you have some of your own, hit us up. Let us know what you're liking out there. We do want to hear from you folks. These are trying and unprecedented times for everyone. I mean, Dan and I have been doing this for a while, and we still have never seen anything like this. So if you're feeling a little flummoxed, a little over your skis, you're not alone. Don't worry. We're here for you. Hit us up. We'll be back in a little bit with the futures rundown to continue talking you off the ledge. And then back again tomorrow for the doubleheader of the option block with our buddy, the Flowmaster. I know he will have some wild thoughts on what's going on out there. He'll also have the data to back it up. And then after that, with our friends over there at CME talking about futures options. And then Friday, we're back with Dr. Vix and special guests to talk about yet another historic, unprecedented week in the vol markets, listeners. And then that's not enough. We're back one final time for all our cool kids in the secret club for options oddities. Got a feeling some SVX is going to make its way into that conversation this week. I already see talk of Tesla puts and everything else. We got a lot of fun trades to talk about on options oddities. If you want to join that party, it's a good time to join that party. TheOptionsInsider.com/pro is the place to go to learn more. Then we're back again next week, all the way through to next Education Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.